Good afternoon. Good afternoon. Welcome to another edition of Monday Market Picks. It's the 13th of May. My name is Tilan Vikramasinghe. I'm the head of research at Maybank Securities, and welcome to a brand new show. The Chinese tech sector, as well as potential moves by the Chinese government to support their domestic market, is giving a boost to China as well as Hong Kong, especially last week. And we also saw is seeing a very strong results season in the US with more beats than misses on the S&P 500, and that's keeping the rally alive there as well. Now, moving closer to home, we think that the Johor Singapore Special Economic Zone, there's been a lot of chatter on that, is going to be a game changer. We've got Hagbin on the line to discuss on why he thinks so. We've also had GENTING Singapore reporting some very strong first quarter results, the highest in 10 years. We've got Samuel on the line, and he's going to talk us through what he thinks about the results now and why he thinks this stock is a buy. The small and mid-cap sector has also been posting some very strong results in Singapore. We've got Jarek to talk about his favorites and what to watch out for going forward. And then finally, I'll talk a little bit about the OCBC Great Eastern Offer. Within the market is showing some positive reaction to it, but we have a very different view, and I'll discuss why. And then finally, we've got some new conviction charts by Nick the Chart Guy. So a lot to go through. If you haven't had a chance to download the newsletter, please do so now. You can do that with scanning the QR code on your screen. So do that. So let's look at market movers. Last week, fairly green across most of the markets. As I said, the HSI was up about 2.3% last week. And a large part of that was some very positive sound bites from China in terms of supporting the Hong Kong market. We also saw the S&P and the Dow running up higher as well. The S&P was up about 0.2%, Dow up about 0.3%. And we have seen that a lot of companies are reporting very strong results. In general, about results have been beating around, have come in about 7.8% higher than what analysts have been expecting so far this result season. So quite good. And we saw some of that flowing through to Singapore as well. The STI up about 0.8%, and the SET in Thailand up about 0.2% as well, hoping for some recovery there, especially with tourist numbers. Now, let's go close to home. This is, and we've been doing a series of reports on the Johor Singapore Special Economic Zone. And we've got Hagbin on the line who's going to be talking to us about that. Hagbin, welcome to the show.
Hey, hi, Tilan. Hi.
Hi. Great. So, Hagbin, you've just released a new report, and you're calling the Johor Singapore Special Economic Zone to be a potential game changer. Now, we've seen attempts like this in the past, and you and I've talked about this as well. What's different this time? And also, what do you think are needed, or what do you think will be the catalyst to kind of make this special economic zone a success this time around?
Yeah, I guess there are a couple of things going for it. I mean, I think the most important is that number one, there is that strong political support. It was not always the case, historically, especially under Mahathir. But now, clearly, Anwar's relationship is much stronger with Singapore, and the Johor Sultan is the king, right? And he wants to produce a win-win outcome for the Johorians and has good working relationship with the Singapore government. He has been elected king for 5-year terms, starting from January this year. And on the Singapore side, we're keen to boost trade, investment, connectivity, and ease some constraints that we face on land, labor, and renewable energy. So I think the stars are kind of aligned, on the physical side. Second is the greater land connectivity. That the RTS link is progressing well, 70% completed. When it's ready, it will run a capacity of over 100,000 passengers a day. That hopefully will commence end 2026, not too far away. And at the same time, there are plans for an autonomous transit system within JB to ease the congestion there. And then maybe if we're lucky, if things really improve, perhaps the high-speed rail could be revived. A third, I think it's just a timely opportunity given the US-China rivalry that MNCs are looking for, another to diversify their locations away from China. And clearly, if the SEZ can be realized, that kind of marries Singapore's financial, logistics, advanced manufacturing capabilities with Johor's competitive costs, energy resources, and abundant land. So there are already some themes within the Singapore arrangement to facilitate that. For example, there is a EDB Southeast Asia Manufacturing Alliance, which actually encourages Singapore developers to invest in industrial parks in Malaysia, Vietnam, and Indonesia. So the classic kind of example here in Iskandar would be the Nusa Jaya Tech Park, right, which is a joint venture between Capital Land, 60%, Sunrise 40%. So if more of this can be realized and be replicated, I think that would be a big plus. And I think the government here is probably, seeing whether the scope for expand the productivity solutions grants, which it grants to companies to find solutions, but if that covers the SEZ as well, then that's also a big plus. Fourth is just a lower competitive cost than the competitive ringgit. We've seen the ringgit, currently at 3.5. That's pretty favorable in terms of cost. And of course, when you compare salary levels in Johor, 80% lower than Singapore for manufacturing. When you compare rents, 75% lower for Singapore for offices, 85% lower for housing rents. Electricity tariffs are also about 60% for businesses. So it makes a lot of sense, to try to take advantage of this. If the free flow of goods and workers can be realized. I think the fifth point is just about the talent labor shortages. The hope is that the zone can create high value-added jobs to build up Johor's human capital and stem the brain drain. There is also some visas and passes currently in the Malaysian system, but none that really allows a Singaporean or a foreigner to live in the Iskandar, a special economic zone, and work in Singapore, right? So I think they can change and tweak the visa. That would be a big plus. The number of people in Medini, Iskandar is only about 10,000, and there will be need to build up a population pool. Taxes will be paid and incurred only when where the work is done, whether it's Singapore or Johor. So that's going to be I think a potential game changer if they can design such a visa scheme. Even when we look at my second home for foreigners, it's currently 56,000 people have qualified for that scheme, but only 2% are Singaporeans. So that's about just 1,000 locals have chosen my second home to retire there. So that can be tweaked again for a concessional scheme for Singaporeans, maybe lower fixed deposits, maybe lower income requirements, and maybe some flexibility on the work part. That could increase investments and spending in Johor as well. It cuts both ways. I think the shorter travel time will also mean that a lot more Malaysians may be willing to commute, to Singapore and work for the day, and then go back in evenings, and that will reduce the pressure on Singapore housing supply and rent as well. The last point is about the green transition. Timely, because Singapore needs to meet its net zero goals, must import 30% of its energy mix from renewable sources by 2035. That's not too far away. Currently only about 2-3% is from renewables for Singapore. So Malaysia just lifted and relaxed the renewable energy export ban last year, and it's only allowing to export up to 300 megawatts of renewable energy to Singapore for a start. How much is 300 megawatts? It's roughly about 7.5% of Singapore's renewable energy needs by 2035. So not too big. And actually, it's quite still modest compared to some contracts that have been signed with Indonesia, Vietnam, Cambodia, which is supplying 1 gigawatt or more. So I think there's scope for that to increase. And we are seeing data centers move in a big way to Pengerang and Johor, and that's going to be part of the special economic zone. And again, that's in part because Singapore has a lot of land and don't have that energy resource, and those data centers can be serving the Singapore market. So there's a lot of things going, I think, that can make it a success. Just need the governments to come and work together. If all goes well, the signing is scheduled for September this year when the leaders meet for the retreat. Thanks, Darren.
Got it. And that's so it really can be a win-win for both countries if this actually can go through. What do you think is the biggest risk in terms of this getting derailed?
I think there are different interest groups, in the negotiation table, we hope that they can come together. I mean, we have the, Sultan and Johor, which is clearly pushing for projects within his, in his interest, particularly, in Forest City, for example. We have Johor, land of Johor Corp, which has, certain lands in certain areas, including JB and Pengerang. We have Khazanah, right, which has a stake in Iskandar. So there are different interest groups in different areas. The hope is that they can, come together, align their interests, and also come up with a tax scheme that's kind of consistent for all these different regions that falls within the zone. There are also stuff like from the outside, pressures on the 15% global minimum tax, right? A lot of incentives in Singapore and Malaysia are tied to tax incentives. So it is a big question mark whether you're allowed to use that as a tax incentive, Singapore is moving away from that, and whether therefore the MNCs, can be lured and can be attracted to set up shop. At the same time, also, we have to bear in mind what's going on in the world. There's intense competition outside for the MNCs. So I think the derailment is really coming up from outside because other countries are also offering schemes, right? Whether it's Thailand or Vietnam or Indonesia, they're also competing with these MNCs.
Got it. Thanks, Arvind. So one of the ways investors can play this theme, if you do think that this is the win-win situation, is to look at the MIBG SEZ Dozen. That these are 12 stocks that we have selected that we think will have very strong short to medium term potential in terms of re-rating as the SEZ news becomes more and more prominent. So on the and we've got six names in Singapore and 6 names in Malaysia. On the Singapore side, we've got Fraser, Centrepoint, Franken, Genting Singapore, and then we also have Singtel on the next slide. If you can have the next slide, yeah, OCBC and Sembcorp Industries. And on the Malaysia side, we have Solar West, SP Setia, and Telkom Malaysia, as well as if you go to the first slide, Axis Street, CIMB, and Itmac Systems. So do have a look at our report to see why we think these are some of the stocks that you should be playing for the SEZ. Now, with that, we're going to move to Genting Singapore. The performance of the stock has been a bit lackluster. It's down about 13% in the past 3 months, but the results for the first quarter actually have been pretty spectacular. We've got Samuel on the line. Samuel, first quarter numbers were a 10-year high. What's driving this?
Hi, Dylan. So, to be honest, luck factor had a hand in the first quarter results. The first quarter's VIP win rate was quite high at 4.6% versus our estimate of 3%. Now, this added about 100 million Sing to EBITDA. Now, having said that, if we dissect the numbers and we look at the operational metrics, even without the positive luck factor, the operations at the ground level was improving quite significantly. For VIP volume, we saw it growing about 14% Q-on-Q. And for the mass market revenues, we saw it growing by about 6% Q-on-Q. Now, this is largely due to the en masse return of Chinese visitors. As we all know, they started coming back in January of last year, but it took some time to ramp up. But in the first quarter of this year, we saw that seat capacity from China to Singapore recovered to about 100% of pre-COVID levels. Now, that may not seem very significant, but if you look at the grand scheme of things, Chinese tourism to various parts of the world is actually still far behind pre-COVID levels. But to Singapore, we are already at pre-COVID levels because Singapore and China share, I would say, a good relationship. I would say, I mean, there's even a term in China that describes, the China's friends in ASEAN, meaning Singapore, Malaysia, Thailand. China calls this the friendship circle. So this, benefits, companies like Genting Singapore over, casinos in other countries. So that's what's been driving this good results in the first quarter. Yeah.
Right. So actually, that was my next question, actually, in a way, like, can this momentum last going into the rest of the year? And also, how do you kind of see the regional competition shaping up?
Okay, right. I mean, for the first quarter, the VIP win rate was very high. So I don't think anyone out there is really expecting them to be so lucky going forward. But we, on the sell side, we are always cognizant of the VIP win rate and always try to adjust for this. Going into the second quarter, we're not expecting much because traditionally this is the off-peak season, for gaming, post-Chinese New Year. However, I'm more optimistic going into the third quarter or fourth quarter. In the third quarter, we should again see another peak in Chinese tourism due to the summer holidays. The thing about Chinese outbound travel is that their trends differ quite significantly from Chinese in-domestic travel. Now, when China domestic travel peaks during Chinese New Year, in February or January, and in May, the Labor Day holidays, and in October, the National Day holidays. Having said that, Chinese outbound tourism to ASEAN countries actually peaks in July and August during the Chinese summer holidays. So if you thought the first quarter results were good, I can imagine what the third quarter result. The third quarter results just may be a lot better than the first quarters. And then as we go into the fourth quarter, with all the year-end holidays, they should be doing well as well. In terms of regional competition, I would say that it is there and they are recovering, but I would say that they are nowhere near pre-COVID levels. If you look at regional jurisdictions that used to fight tooth and claw with them, like Cambodia and Macau. Cambodia, I would say that they are suffering from a bit of a perception deficit, so to speak, with all the scams going on. That has deterred a lot of regional gamblers from going to Cambodia and sticking to the home jurisdictions like Singapore. In Macau, the junkers have effectively been killed off. So that's made it a lot harder for Chinese to visit Macau and gamble there as VIPs. There's even a joke now, I would say it's a half joke, that it's easier for a Chinese VIP to get an exit visa to go to Singapore than to get one to go to Macau. So so despite what people have been saying about Singapore being very expensive or whatnot, Singapore remains an aspirational destination for tourists around the region. So regional competition is there, but it's nowhere nearly as intense as pre-COVID levels. So I think Singapore is still doing quite well.
Right. So stronger second half coming through, regional competition relatively tame, with Singapore being a preference. So time to relook at that stock, especially at this sort of valuations. Thanks, Samuel, for that. In the interest of time, I want to bring in Jarek online. Jarek's here to discuss some of his favorite Opportunity Plus stocks. So Jarek, welcome to the show.
Hi, Dylan. Thanks for having me.
So, Jarek, a lot of small and mid caps have been reporting. What has stood out to you so far?
I think one of the recent ones that stood out to me was CSE Global. So if you look at CSE Global, even though they didn't report the profit numbers, they only reported the top line, but the top line actually grew in the first quarter, 24% year on year. And they actually announced that they secured about 186.2 million orders in the first quarter, which is up 16.7% year on year. And this is excluding the 49.2 million data center contract they've won and announced on 18 April, which actually could signal a potentially much stronger second quarter going forward, because it's supposed to be in the first quarter, but it's now pushed onto the second quarter. So we do think that, if you look at first quarter, traditionally CSE's first quarter is the weakest among the all three quarters. And for a weak quarter, they already grow top line by 24% year on year. So it actually shows that going forward, the next 3 quarters will be actually stronger, which would actually mean that there's actually upside to my numbers. But we are just waiting to see first half to see how the margin numbers perform first. Yeah.
Right. I've actually got a question from the audience here from James Teo, who's asking, CSE, potential beneficiary of AI boom and stuff like that. But why had the stock gone sideways since October?
I think if you look at the previous announcements, I think there's a key shareholder that's been selling, which is actually Fidelity. So they've been selling down their stake from about 10% last year, the start of last year, to I think they're still currently selling. So I think that's causing a bit of overhang. But bear in mind that we also did a placement for them at 40 cents previously. So, but it's still above the placement price. So I guess I think the market still needs some time to digest the selling. And I think that with the strong fundamentals, eventually the selling will be gone and the share price will pick up going forward.
Right. Okay. I also want to kind of talk about Dynamac here. I mean, we saw Keppel exiting their majority stake to Hanwha Aerospace. What are your thoughts on this? Has this taken away a big overhang for Dynamac?
Yes, I think if Keppel has been saying that they want to sell their non-core assets, I think, in last year, actually 2 years ago, and they have actually been selling some of their Citroen, and I think the market is actually worried that, they would sell their Dynamac stake in the open market, right, part by part, and which they have sold all their warrants, in the market as well, which have caused, the share price to retrace a bit in the recent weeks. But, with this sale is actually quite positive for Dynamac. First, it removes the overhang. That means that no one will be worried about Keppel selling anymore, right? So there's no more overhang on this stock. Second one is that if you look at Hanwha, it's actually the third largest shipbuilder in Korea, and they actually specialize in building FPSOs as well. So I think that's the angle where they are coming in at. Management has not had any talks with them yet, but they are a customer of Dynamac. So basically, if you look at it, I think there's some potential synergies that they could, work together, as they are all from the same field as compared to Keppel, who is exiting the oil and gas space or exited the oil and gas space. So I think in the longer term, this would be a more positive share. I mean, it will be a more positive for Dynamac shareholders than Keppel holding on to their shares. Yeah.
Got it. Thanks, Jarek. Thanks for joining this show.
Welcome. Thank you.
After Friday's announcement by OCBC that they're making a unconditional offer to take Great Eastern private, the stock has had a very positive reaction, but we are a lot more cautious than the market here. If you look at the offer price that OCBC is making, it's about 0.7 times price to embedded value. Now, for an insurance company, what embedded value means is all the discounted present value of all the business that they have already underwritten. So these are all the expected future cash flow streams that Great Eastern can get from all the business that they have already underwritten. So by offering 0.7 times, basically OCBC is saying that we are not putting any value to any new business Great Eastern will write in the future, basically saying that the general sales force, the agency business has zero value at this stage. So we think there is that risk that OCBC might have to offer a higher price to minorities of Great Eastern to actually conclude this deal. So that's something to watch out for. Now, at the same time, when we look at the deal, we don't see what are the synergies that OCBC will get by buying that last 11% or so of Great Eastern that they don't already own. They already, report Great Eastern from a consolidated basis on their P&L. Combined, they have the second largest market share of bank assurance, and they have leading positions in both Singapore and Malaysia. So we're a little bit unclear as to what OCBC will get by privatizing Great Eastern at this stage. So that's something to kind of watch out for, particularly in terms of the offer price for Great Eastern. And if they do offer a higher price, obviously that will have an impact on OCBC's capital. So we are keeping a hold recommendation on the stock as a result. Now, we're out of time, so we're going to quickly go into the charts by Nick, the chart guy. We've got two charts today. Nick's got accumulate on JARDINE, Cycle and Carriage, as well as SIA. Both of them, he thinks the bullish indicators are becoming stronger. So do have a look at that and do read his explanations in our newsletter. With that, let's go quickly into the macro dates. We still have a few Results coming out 15th of May, Singapore Airlines. So just just nice, especially looking at Nick's momentum charts on technical. So do have a look at that. We also got Netlink Trust coming out on the 16th of May as well. In terms of events, we've got a few. SI Engineering has a post results, a virtual NDR on the 14th of May, as well as current market dynamics of TV and connected TV advertising in the US on the 15th of May. Do speak to your salesperson if you would like to be part of any of these. With that, we are out of time. Thank you so much for joining us this week. As always, we really appreciate your support. Do tell your friends and your colleagues and your clients to join our show in the subsequent weeks. And with that, have a profitable trading week and see you next week.